Welcome everyone to Vested Interest. This is Shane back again for their stock pick of the day video. In today's video, and it is April 9th, we're going to take a look at Huntington Ingalls Industries. This is out of the industrial sector. Let's jump right in. And if you are new to the channel or you have not done so, would like to help me out, hit that thumbs up button down below. Hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hopefully you're on your own investing journey as well. And hit that notification bell so you're notified whenever we put out any new content. Drop a comment down below. Let me know what you think of the videos. Is Huntington, ticker HII, in your portfolio? Is it one you're watching? Is it one you're selling? Is it one you're avoiding altogether? Would love to hear from you. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. And just because it meets 5 of 8 or 6 of 9, if it's a financial company, doesn't necessarily mean I'm investing. It goes into my watch list, and then I do more of a deep dive into the financials. Find out a price I'm willing to pay by doing maybe discounted cash flow analysis or other analysis, depending on what type of company it is. And then, and only then, if it lines up price-wise with what I'm willing to pay and is one I'm looking to add, maybe I add it to my portfolio. It's also how I look at companies already in my portfolio to see if they still meet the criteria I've set up as the initial screener. Then obviously if they don't, I do more of a deep dive, see what's going on, and it may be time to trim them out of the portfolio or at least start keeping an eye on them. Now back to ticker HII, Huntington Ingalls, and that's what it is, HII.com. That's their homepage where I pulled this information from. Again, that's HII.com. That is their homepage. On March 31st, 2011, Huntington Ingalls Industries, ticker HII, again out of the industrial sector, formed as an independently publicly traded company when two legacy shipyards joined forces to become the nation's largest shipbuilder. Since then, HII's portfolio expanded further with the establishment of a third division that delivers all domain technology solutions to civil, commercial, and defense customers, both domestically and internationally. And today, HII is a global all-domain defense provider with a more than $45 billion shipbuilding backlog and more than 43,000 employees. It is the largest industrial employer in both Virginia, where the company is headquartered, and in Mississippi. The company's name derives from the founders of its shipbuilding divisions, Collins Potter Huntington, and founded Newport News Shipbuilding and Dry Dock Company, and Robert Ingersoll Ingalls Sr., who established Ingalls Shipbuilding. So there you have it. It's really two businesses that have come together recently. As recent as 2011 is to today, and created one large company. And they primarily do all of the shipbuilding for our military, though they are an international company as well, so they do some shipbuilding for other entities out there, right? But as long as we have a military and there is a Navy that needs ships, submarines, they will have business. That's what this company's bread and butter is. Now on to the financials of the company and why we're taking a look at them. Down 3.56% on the day. We are talking about Huntington Ingalls Industries, Inc., ticker HII, out of the industrial sector, closed out the day at $275.50. 52-week range as low as $188.51, as high as $299.50. So they are closer to their 52-week high than their 52-week low. Market cap of $10.912 billion, a beta of 0.60, less volatile than the overall market. 1 being the market, anything over being more volatile, anything under being under. Lower volatility. Price to earnings PE ratio $16.14 per share, 16.14. EPS, earnings per share, one of the rare cases you see a higher EPS than a price to earnings, $17.07 per share in EPS. Earnings date coming up May 2nd. Forward dividend $5.20 paid out on the year. They are quarterly payer. We'll see that here in a little bit. Dividend yield 1.79%. Would like more of a pullback on this. I actually owned this company a couple years back, was buying it down here in the 180 range. I think I sold it in the mid 250s, right around maybe even lower than that, 240, 235, somewhere in there. It ran up. It's obviously ran up more since then. And ex-dividend date February 22nd. Looks like they paid out on March 8th. 1-year target estimate, at least according to Yahoo Finance, $289.82. Now we're going to jump over and take a look at dividend yield theory to see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average of 2.11%. We compare it to its current 1.79. And since it is lower, that speaks to overvaluation on this one. So at least according to dividend yield theory, this one needs more of a pullback. Payout ratio is low, though, at 29.41%. So that gives them a lot of free cash flow left to raise that dividend, pay down debt, make acquisitions, reinvest back into the company, and repurchase shares. Now we're going to jump down to the financials. We're going to look at free cash flow for this one, and we're going back to 2020 here. $740 million in free cash flow. 2021 looks like a bit of a drop down to 429. 2022 jumped back up to 482. 2023 jumped back up to 678 million. So they are, I mean, compared to 2020, they are down a little bit, but overall, the last 3 years, they are growing free cash flow. So I'd have to go back and look and see if there was maybe a divestiture or something going on here from 2020 to 21. But that was a big drop. But then again, since then, they look like they're relatively smooth sailing. They are repurchasing their own shares. 84 million here, 101 million. So that's a little bit of the difference between 2020 to 2021. They are repurchasing more shares, but I don't believe that accounts for the total drop there. Down in free cash, or down in repurchase of shares in 2022, but up in free cash flow. Same thing in 2023. Significant jump up in free cash flow in 2023. So overall, I'd say from 2021 forward, for the last 3 years at least, they're growing their free cash flow, but there was a drop back here in 2021, or 2020 to 2021. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. The previous page was Yahoo Finance. You pick any sources that you like. Just make sure you're not just blindly looking at one source. Make sure you're looking at a couple, two, if not three, to make sure the information you're getting is accurate and up to date. They only have 3 analysts that have taken a look at this. They call it a consensus hold. I would agree. I want more of a pullback on this one. You know, down into the low 200s would be under 220, I think, is probably decent. And lower, obviously, if you get lower than that, great. But right now where it's at, it is a little overvalued, at least according to the dividend yield theory, and in my opinion. They have a low estimate of $217 right there. That would be much better in my opinion, which would be a 21.27% decrease from where it currently sits. Average estimate of $267.33, a 3% decrease from where it currently sits. And if it happened to hit their high, you'd make some money at $295, which would be a 7.04% increase. All the while, you could collect that just under 2% dividend yield. Now, for return on equity and return on invested capital, I typically like 10% or better. Return on equity definitely meets that at 18.1%, so above the 10% I'm looking for there. Return on invested capital just under at 9.22%, but that is not egregiously so I could deal with that. EPS growth is forecasted at 10%. I like 5% or better, and revenue growth forecasted at 4%. Very good numbers again. Just don't like the price where it's at. It needs to be down lower, under 220, under 225. I might even be interested in nibbling on this one if I wanted something in the defense sector here around shipbuilding in the industrial sector. Might be worth throwing on the watch list, but again, needs more of a pullback in my opinion. And it is a quarterly payer, right? We're going to take a look at the dividend here. Payout ratio low, 30.46. I like 75% or lower, so this definitely meets that metric. Not a fast grower, but not the slowest, 4.96%. You know, that's pretty decent dividend growth. It beats inflation most years, beats the 3.9% we're currently experiencing. So if it beats inflation, I'm all right with it. 11 years of dividend growth, buyback yield of 0.5%, shareholder yield 2.38. Let's take a look at dividends. They do pay out on the March, June, September, December timeframe. Going back to August 2021, they were paying $1.14. They raised that up in November 2021 to $1.18. Raised it up to again in November 2022 to $1.24, and then again November 23 to $1.30. So I would expect 2024 for another raise in November to keep up with this 11-year growth. That'll put them at 12 years of dividend growth. So overall, not a bad one out of the industrial sector. If you're looking for something, like I said, in the industrial sector, in the defense area of that sector, might be worth throwing on the watch list. It is one that I owned several years back. I thought it was a little overvalued at the $235, $240 whenever I sold it, which is why I sold it. I think it's overvalued now. Would need more of a pullback back under, like I said, $225, $220, somewhere in that range is more in line with where I think that one would be fairly valued, or even give you a little bit of a margin of safety. Let me know what you think in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hopefully you're on your own investing journey. If you have not started your investing journey, let me know in the comment section down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Huntington Ingalls you'd like me to cover, in a stock pick of the day video in the future, go ahead and drop it down below. There is one for Keurig out there that I'm waiting on a pullback, and we'll get that one in there for the individual who requested that. So I do have it on my list. I do personally read and respond to the comments. Always interested to read your questions, opinions, and suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great day, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk against money. You should never invest in any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.